Hello, Oracles, and happy Father's Day to all of you DILFs out there, that is, devoted, involved, loving fathers. So happy Father's Day to all of you. I hope you guys have some amazing things planned today. And today I will be picking up my son to take him to see a minor league baseball game with my brother and nephew. And in a very fitting fashion, I wanted to discuss today generational wealth and the fact that right now we are in a moment where we can start creating generational wealth for the future, for our children, grandchildren, and future generations. Now, Ron Barron was speaking about this the other day, saying when he started his company back in 1982, that was during a time of very high recession. That's when we got Paul Volckered. The market was very suppressed at the time, and that is when he started his company and took it to the place where it is today at multi-billions of dollars. And so he is saying that these times right now are very similar to those times then, and his children will be able to take advantage of these opportunities like he did back then. Now, I had a discussion with some of you in the comments about how Chicken Genius is saying don't buy now, but Ron Barron is saying these are the times to buy. So which one is right? I think they both actually have the same mentality for the future. It's just in different views. So when it comes to Ron Barron, he's more about the dollar cost averaging during these times to be able to build that generational wealth in the future. Whereas Chicken Genius is more about a little bit of timing. He thinks that the market's going to come down further before we're going to be able to purchase anything, because why put your money in now if you're going to be losing it in the short term? So again, both of these are different mentalities, but I think it's more of Ron Barron is looking extremely long term, whereas Chicken Genius is looking short term before we find the bottom more as timing. But both of them agree that long term, these are great buying opportunities. Chicken Genius is just saying don't buy right now. And so for me, I kind of do a combination of the both. So for me, as I had said before, I'm saving up a good chunk of cash in my portfolio, but I'm also dollar cost averaging. So this way I'm going to win on both ends of the spectrum. So if we have already hit a bottom, I will be perfectly fine going forward. If we have not, I will have cash on the side to be able to invest as we go further down and do find an actual bottom. So for me, I'm saving my portfolio 10% of cash. So I'm going to have 10% cash in my portfolio. Anything that goes over that 10%, I will invest in QYLD as a high dividend yield play. And when it comes to Tesla, Tesla is slated to be 69% of my portfolio, and I put in $15 every day into Tesla. And then if we start dipping under 625, I will begin adding more extra out of my cash allotment as well. And two things that I had noticed over the weekend, we had talked about it before, where crypto has come back to being a leading indicator for the stock market. And the last time we had a 3-day weekend, which was Memorial Day weekend, we had a little bit of a run into the Friday, thinking that maybe Tuesday was going to look good, and then we ended up crashing down. Well, we had the same scenario this past Friday where the stock market, we were running a little bit into close. We had a green day for the NASDAQ, S&P, and Tesla, and now we have crypto crashing over the weekend. So are we going to get a green Tuesday or a red Tuesday? Again, for those of you who are looking to invest long term, this really doesn't matter. But many of us on here as well are just learning the stock market, and that's something to pay attention to. So whether you're going to be a long-term investor or a short-term swing trader, just learning things along the way is always beneficial. And so paying attention to crypto coming down, now it has bounced. Bitcoin did dip into the 17,000s. It is now back over 19,000 again as of the time of this recording. So, we do have another 2 days before we do open on Tuesday. Maybe we turn around and come back up. We will see on Tuesday what happens there. But even with crypto, let me know your thoughts in the comments. Do you think crypto is going to be a long-term player in the stock market and in the economy? Or do you think crypto is going to go away altogether? And now the Fed does have a model that they run that kind of looks forward and gives forecasts as far as what it predicts for the future. And the model came out and said only 10% chance of the Fed doing a soft landing. And there's an 80% chance of it not doing a soft landing. I'm actually kind of curious as to what the last 10% is. That could be scary to think about, but now it's looking like a soft landing might be off of the radar. And now the Fed and Janet Yellen seem to think that we will still get this soft landing. Only time will tell on this, but this is why I prepare the way I do. and I'll run you guys down a breakdown of my weekly income and my investments and how I break that out with expenses and everything, so that you guys can see how I'm doing it. Now again, I'm not a financial advisor. Everyone has different financial situations out there, so you've got to do your own due diligence and research for what's best for you. But I can share with you guys what I do for myself and how I have grown over the years. And so for me, on a weekly basis, and this doesn't include any income that I get from Beachbody because that's not consistent, or YouTube, because again, that's not consistent, and my commissions that I get from work or any bonuses, because that's at the end of the month, so it's a one-time lump sum. So I try to base all of my expenses and investments off of the consistent money that I have coming in, so everything else is extra. This is what helps me keep my expenses low, because I try to live a simple life for the most part, and by keeping my expenses low, this way anything that I have extra, I can invest or put into cash for any future investments that I want to make. So on a weekly basis, I am bringing in take home $959, and my expenses, excluding rent, are about $480, and I put $250 into savings, and that savings is because I'm looking to buy a house in the future. And I always like to have this little safety net nest egg on the side, so in case I have any emergencies, like when my alternator went last week, when I had to pay $600 for that, wasn't a big deal because I had that money on the side, so I wasn't having to scramble for anything. So I've got that little safety net there, which helps me out. So that's why I put $250 into that every single week. And then into my investments, I put $287 every week into investments. Out of that, $115 goes into my IRA, because $115 will end up capping me out at the end of the year at $6,000, which is what the maximum allotment is. And then the other $172 I break down into stocks, cash, and crypto. And even with that, the cash itself in my portfolio is $50. So almost 30% of what I am putting into my portfolio is cash. So I've got a lot of cash in my savings for the future for a safety net and a house, and I've got a good chunk of cash in my portfolio, so just in case we get a larger crash coming, I've got plenty of cash to be able to add into this. So again, these are just my strategies that I'm using, and again, similar to Ron Barron, I am dollar cost averaging into this. I do see this as an amazing buying opportunity for future generational wealth for my son and future generations. Now, when it comes to Chicken Genius, maybe I don't hit the bottom. Maybe I don't time it the best at the bottom and I don't get the lowest prices, but that's fine because I still have all this extra cash on the side to be able to buy in at those lower prices and bring my cost basis down. So my dollar cost averaging is bringing my cost basis down, and then the extra cash on the side can bring it down further on top of it. So sure, I may not get the bottom, but I'll get closer to the bottom than I would if I did not save this cash and did not dollar cost average. And one thing that Chicken Genius and Ron Barron do agree on is that Tesla is a once-in-a-generation opportunity to purchase a stock and build yourself a fortune for the future. And most of you on here agree as well that Tesla long-term is going to be a game changer for our wealth in the future. This is the reason why I invest as much as I do into it. And so for me, between Tesla and real estate, I plan on having massive generational wealth that I could pass on to my son so that he can then pass on to his children. So in the future, they can live a free life and not have to be stuck working, doing, what they don't want to do. I want them to be able to have the freedom of doing whatever they want that makes them happy because they don't have to worry about money. Plus, it will also allow me to travel the world. As you guys can see behind me, this is my scratch-off map where, I scratch off all the places that I have been, and there are a lot of places I need to get to. And I've been speaking with many of you in the comments, and you guys are all absolutely amazing. Offering up when I go traveling the world to visit you guys, and I absolutely will hit you up. I've got Mariano down in Argentina. I will talk to you. And I apologize, I cannot remember your name, but somebody over in Denmark, I will talk to you. And I've got Abhishek up in Canada that I will go and visit as well. And I've got David and Q that I will have over at my castle in Italy. So yes, I plan on traveling the world. I will see all of you guys when I do so. And so while these are the painful times right now, these are the times that we are going to learn and be able to get through to create our generational wealth for the future. So you've got to look long term, and I mean long term. So, maybe on this channel we do discuss a lot of short-term and near-term stuff that's going on. For me, it's very educational because, again, I'm newer to investing and I know many of you are as well. So being able to learn during these times will help us when these times happen again in the future, so we'll know how to better invest when they come around. But when you're looking really long term, you look at the Ron Barons and the Warren Buffetts, and Warren Buffett himself discusses how, the most consistent way to create and generate wealth is pretty boring. It's not going to be exciting times. And dollar cost averaging is pretty darn boring. You're really just putting in a little bit of money on a regular basis all the time. And that's it. You're not doing these options tradings and swing trades and, hey, I made $20,000 today. It is time in the market. That is how you're going to win with generational wealth. Sure, maybe you can make some great swing trades here and there, but historically, it is a proven fact that dollar cost averaging is going to beat timing the market. And it's very much like losing weight. If you're trying to lose weight, it's about creating habits that will help you lose weight consistently over time and keep it off to keep your health going. If you do a crash diet, sure, maybe you can lose 30 or 50 pounds in a short period of time, but what did you learn? You really didn't learn much. You learned how to crash diet, which isn't always the healthiest thing for your body in the first place. And then most of the time after a crash diet, most people put that weight right back on. It's just not healthy. You can lose 50 pounds easily by cutting a leg off. Also not healthy. You've got to create habits that are going to keep you going long term. The same holds true for the stock market. You've got to find whatever habits and investment strategies are going to work for you on a consistent basis to generate long-term wealth. You're going to have times like this where, you're going to be losing your money. You got to remember, you don't actually lose any money until you sell. So as long as you look long-term and feel that the stocks that you are invested in are going to be higher than they are now in the long term, then investing now is still a strong strategy. And of course, nobody knows where the bottom is, so you can dollar cost average as it comes down. And so this is why I have the strategy I have that I've created for myself, and I'm always tweaking it, trying to find different things when I get different information, from the economy, from the Fed, and all this and that. I tweak things, and you guys who have been following me for a while now know that I've been tweaking my strategy all along because the different information we get requires you as a wise investor to change your strategy. And then when we get to a point where the Fed U-turns and we do start coming back into a bull rally again and we get back into a bull market, my strategy is going to change because I won't be keeping that kind of cash on the sidelines. I'm going to want to have my money into the market. So this is why these are the times that you learn. And many of us have gone through that quick bull market that we had after the COVID crash. Now we're in a bear market. So quite honestly, I think the last 2 years and the next 2 years are going to be amazing learning opportunities and great chances for us to build up and accumulate as many shares as possible. Because right now, that's what it's all about, is accumulating shares. If you think about, how many shares do you need in order to retire off of Tesla in, let's say, 2030? And there was a great video that Abhishek had shared with me about that, breaking down, if you wanted to have $1.5 million in 2030 in Tesla shares, how many shares would you need to have? And I'm going to break mine down based on, my own price targets for 2030. And so I'm going to break that all down and figure out how many I need. So it comes down to how many shares do you need, not what the price of the share is now. The benefit is the price of the share now being lower means that you can accumulate more shares faster, which means that you can get there and retire in 2030 by spending less money now on the shares. That's how it works, and that's why these times right now in this bear market are amazing buying opportunities to get you that generational wealth for the future. Let me know in the comments below, how many of you are fathers, grandfathers, maybe great-grandfathers? How many children and grandchildren and great-grandchildren do you have? What are your plans for today? And what are your plans for building generational wealth for all of them? Thank you all so much for watching. I appreciate all of your support and feedback. If you have not subscribed, please do so down below. Sign yourself up for notifications. I am over on Twitter at OracleTim1. I share all of the latest Tesla news, pertinent stock market information, and all of my daily trades. We do have a Discord chat, that link is in the description. And if you'd like to support the channel any further, we do have a Patreon, that link is also in the description. Thank you so much. Have a great one.